Boom! At the open, all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at it's sad like she fine as it. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's from pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounce. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and die. Now I watch moves in the NASDAQ profits. Used to run from the ATF and them cops. Now I run down ETLs, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, big profits. Eat my bacon kicking it in, make profits. Light up, watching them man make profits. While I'm still in my sand, making profits. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang. Hey, making profits. We some snipers.
Hey, yo, what's up, everyone? Good afternoon. If you're watching this later, then good evening. Folks, my name is Michael Edward, former award-winning hedge fund trader, and now the current head trader and co-founder of True Trading Group. And as you can all tell, I'm sick as hell, okay? But luckily for me, my partner, Adam Hyman, we call him Shug in True Trading Group, has agreed to stand in for me today. And this is why you need to start to get very excited about this right now, because Adam is not only the best entrepreneur that I know. Literally working with him has helped turn myself into a multimillionaire. A fact I know that he relishes in very much so, by the way. But just as much as I know trading and macroeconomics to agree some would consider to be supernatural, he understands trader and investor psychology better than most. You guys, you see, Adam runs the entire business side of True Trading Group. And for that reason, we've kept him out of the spotlight, so to speak, so that way he's not bombarded with questions and one-on-one requests, etc. Right? So the truth is, I've actually never met someone that understands people and their desires to become successful and the psychological blocks they face along the way better than he does. And for those that don't know, Adam has been interviewed on many, large top podcasts and has worked with many high net worth individuals and some celebrities as a consultant for their own businesses and their own professional goals. And having started at just 23 years old and now the ripe old age of 39, he started 3 businesses that have totaled combined revenue of just around $100 million. Now, this is going to be a huge week for True Trading Group. We have our very first in-person meetup in Miami. As you can tell, I'm sick as hell, but I sound worse than I am. I will 1000% be there with you all in Miami. You have nothing to worry about. I will be there ready to kick some ass. We have so many fun things planned for you guys. However, I do need to rest. Okay. So I asked Adam as a favor, he can put together a presentation on trader psychology for today's live. And what he came back with is nothing short of actually a masterclass. So you're all in for a serious treat. So without any further ado, everybody give a big warm Ayo. Please welcome Adam.
What's up, buddy?
Oh, what's up, man? I'm out of here, bro. I'm dishing a rage.
No, go for it.
Before I start coughing on here.
Go for it. Oh, I just wanted you to see real quick. I know that you always wear your watch on here, so I had to like flex a little bit.
Very nice. I like it. Very nice.
Yeah. Figured I'd have to give some, if people see that I have a nice watch, they won't notice the fact that I'm in my mom's basement behind me.
I'm out. Take it.
All right, bye. What's going on, guys? My name is Adam Hyman. I am the co-founder, co-creator of True Trading Group. Welcome to the live stream. Welcome to the live stream. All right. For those that don't know, True Trading Group is a financial education and trading community that provides training, mentorship, and trading tools for traders and investors of all skill level. True Trading Group's mission is to help traders and investors achieve success in the stock markets by providing education and support. The company offers a range of training programs, including live webinars, video courses, and mentorship programs, as well as access to trading tools and real-time market data, all for one low price for the entire year with no upsells for courses and tools. The company's or TTG's focus is on teaching traders how to identify opportunities and risk and manage risk within the markets using a variety of trading strategies and techniques. True Trading Group's approach is based on technical analysis and market fundamentals, with a focus on stocks, options, futures, and crypto, and all styles of trading, including day trading, swing trading, scalping, and long-term investing. And yes, True Trading Group, or as we call TTG, does offer trade alerts to its members. The company's trade alerts are designed to help traders identify potential trading opportunities and make more informed trading decisions. And their track record, or True Trading Group's track record, speaks for itself with an over 80% win rate combined for over 3 years. TTG's trade alerts are based on technical analysis and market research and cover a range of asset classes, including stocks, options, futures, and cryptocurrency. The alerts include entry and exit points, stop loss levels, and other key information to help traders manage risk and maximize their returns. In addition to trade alerts, TTG provides a range of other trading tools and resources to its members, including access to real-time market data and analysis, live trading webinars, and one-on-one mentorship and coaching from experienced traders like Mike. It's important to note that while trade alerts can be helpful, can be a very helpful tool for traders, especially those that are busy, they should not be relied upon as the sole basis for making trading decisions. Traders should also conduct their own research and analysis and develop a comprehensive trading strategy that takes into account their own risk tolerance and financial goals. Welcome to the live stream. If you are ready to learn, trade, and profit, you have not only come to the right place, you have come to the place. Welcome to the TTG live stream. 6 nights a week, Sunday through Friday, we go live on this YouTube channel where we drop golden nuggets of education that can help you become a better trader and a more profitable trader immediately. If you're new to the channel, make sure to subscribe to the channel, smash that like button, and share the stream on your own social media. Let's reach out and empower as many people as possible. All right? All right, let's get a quick AO in chat. How am I doing reading off that script today? Mike had to go and get sick. Unreal. Bro, thought he was a machine. He's no machine. All right, 1 second, please. All right. Excellent. Let's move on here. So the first thing I'm going to do to get this out of the way is I have had Mike. Mike has put together an entire weekly outlook that I am now going to go over with all of you. All right. And without further ado, what I want to do is get right into the weekly outlook. I want to get that out of the way because I want you guys to know what to expect going forward this week. I don't want to really distract from that. I want to get right into it so you know exactly what to expect, exactly what the game plan is on making money. And then we're going to get into a huge lesson on trader psychology and trading tools. So first thing we're going to do is we're going to go over this weekly outlook. Then we're going to literally go into a deep dive or a masterclass on trading and investing psychology and the tools needed for that. All right. So let's get on with it. Last week was a crucial test of major support level for the S&P. In the month of February, everyone was talking about the golden cross formation, not to be confused with the golden shower. That's when the 50-day moving average, the dark blue line, crosses above the 200-day moving average, the yellow line. It is typically a bullish indicator that signals near-term momentum is to the upside and higher prices are to come. But last week, the first test of the 200 days since the golden cross, and it held beautifully and quite powerfully. The 3,900 level on the S&P is a key support level that bulls want to see hold. And hold did it ever. It not only held last week, but it catapulted the SPY 12 points higher in just 2 days. On the SPY, the 200 and the 100-day moving averages were tested Thursday, and we saw massive technical follow-through on Friday. This comes after the SPY tested the 200-day moving average on February 24th, March 1st, and March 2nd, and it held all 3 times, unlike my first 2 marriages. This technical move has pushed the SPY up towards the top end of its new trading range, as we are coming to some key resistance levels now. Mike believes this resistance levels will hold the SPY in check until we get an onslaught of economic data and fundamental catalysts over the next 2 weeks. These next 2 weeks are going to be insane. You have Jerome Powell testifying in front of the Senate and House this week with the Beige Book, which is a summary of economic activity prepared by different Federal Reserve Bank districts. You have a job openings report, the jobs report, and unemployment report. All happened this week. Geez, that is a lot. And we're going to be in Miami this week for the TTG meetup. So for those that are going to be there, you are going to get to go through all of these catalysts with us in person. So mazel tov. We're going to see if the jobs market is still red hot or if it's beginning to loosen at all. Then next week, you get CPI and PPI inflation data. And believe Mike when he says, with as hot as the last inflation report was, all eyes will be on these reports to get a feel for how much further the Fed will have to move rates to get inflation under control. All hell is about to break loose. Did he really write that? He did. All hell is about to break loose, and he anticipates a surge, or should, in volatility that will create tremendous trading opportunity from us. All right? Mike expects to see a strong jobs market, but he's interested to see how the market reacts to the jobs data. It's obvious that high inflation would cause markets to go down, but the jobs numbers can be taken either as bullish or bearish. Bulls would take a strong jobs market as a good thing because it increases the chances of a soft landing. If the jobs market remains strong throughout the Fed's fight against inflation, bears would take a strong jobs market as a bad thing because it means inflation will be harder to bring down, meaning the Fed has to raise rates even further, and that increases chances of a recession. So, in short, we are very, very interested to see how the market will react to this data. Nobody, not Mike, not anyone over at True Trading Group is going to try and predict these reports, but rather we will try to react to them and to know key levels to trade off of. And to kind of go into that, this is exactly what we are going to discuss this evening, which I'll get into in a second when we get into more of the trader psychology and why this would be so relevant for today. Speaking of levels, let's take it to the charts real quick. This 404 level on the SPY is Friday's high, but also a previous level of support from February 17th. And the high of the day and gap entry from February 21st. This is our first level to watch for tomorrow. All right, write that down if you're watching right now. Okay, I'm going to repeat it. This 404 level on the SPY is Friday's high, but also a previous level of support from February 17th and the high of the day and gap entry from February 21st. This is our first level to watch for tomorrow. A gap above 404 should see a further push to close the gap from February 21st up to the 407 zone. Then, once you get to 407, you have a big resistance level from 407.50 to 408.50, which is all the previous support from February 14th and February 16th. And it was even resistance back on February 10th and support again on February 6th and February 7th. That 407 to 408 area is a key price area for the SPY that has consistently affected the price action when reached. Again, that 407 to 408 area is a key price area for the SPY that has consistently affected the price action when reached. So pay attention to this zone. We think a gap and run into the area on Monday could provide short opportunities on weak stocks. And lastly, 414 to 418 is a brick wall type of resistance, back from earlier in the month of February 2nd to February 15th. But we honestly don't think that that level is in play this week. And if we do get there, we'll look for short opportunities in front of it because we think the only way to break through that resistance level on the SPY is if CPI and PPI reports the following week come in under expectations. We think you'll need a major catalyst like that to break those resistance levels. As far as support for longs, we like a retest of the 401 zone. Watch for pullbacks to 401. This was resistance on February 22nd, 23rd, and 27th. Excuse me. We broke above that level Friday. I would expect some buying to step in at this level on pullbacks. I'll be looking, and Mike will be looking, we will be looking for longs in relatively strong stocks if the SPY goes to retest 400 to 401. Really important for this week, we'll have to keep our ears open because Jerome Powell is testifying in front of Senate on Tuesday and the House on Wednesday. And then Thursday, the TTG in-person meetup. We will be, you can guarantee members of Congress will ask about inflation and the jobs market and potential recession. So his responses to such questions can and will move markets. We'll be covering this live in the TTG chat to let all of our members know where the opportunity lies based on his responses. Powell can either push this two-day rally further or chop it down to the knees. Then the market will want to see job openings begin to lessen to show the labor market is loosening. More job openings than people looking for a job may sound like a good thing for the economy, but it's really bad for inflation. And Jerome Powell and other Fed members have made this clear, so we'll want to see this number trending downward. And Thursday's jobless claims number is expected to be a strong one again, as it's come in under 200,000 for the last few weeks, signaling a very, very tight labor market. But Friday's employment report and unemployment number are going to be big labor stats for the week. I think the market could start the week strong and finish weak. Again, we think the market could start strong this week, but finish weak as the data unfolds. The current unemployment rate is 3.4. That's the lowest since 1969, also the year I wish I was born. But again, it's going to be very interesting how the markets react to strong jobs data, assuming it still will be strong. Is this going to be good news or bad news, or bad news, good news? We have to wait and see. All right. And all this lays the groundwork. Everything that's going to happen this week, and there's a lot of it, lays the groundwork for CPI and PPI data for the following week. And then you blink, and it's another Fed meeting on March 22nd. So buckle up your seatbelts, folks. This is going to be one hell of a ride. All right. And really quick before we move on, if anyone has any questions about this week before we move into trader psychology, I have with me my friend and TTG mod, Mr. Chris Toner. Chris, how are you, buddy?
All right. Good afternoon. How you doing, man?
Afternoon, sir. All right. So really quick before we get into the trader psychology aspect of it, if anyone has any questions, we have Chris Toner. Chris is one of our mods. Chris has been trading professionally for over 2 decades. It's literally how he supports his kid as a single father, and he's here with us now. And put it this way: when Mike has questions specifically about trading options, this is the person that Mike goes to. So let's get into it. Any questions anyone has about this week and the report that we just gave out, please type your questions in chat. We'll answer a couple, and then we'll get right in. We'll get right into the trader psychology stuff. All right. Let's see. What do we got here? Anybody? Chris, can you share your screens and just... Oh, you got them. Here we go. Perfect. What to worry about this week? Ooh, that's pessimistic. Let's get into it. Chris, Ricky J. Bluesman is asking, I've just come on. Welcome. Is there anything to particularly be worried about this week?
I wouldn't use the word worry necessarily. There's definitely some things to be aware of. I mean, the biggest being with Jerome Powell and his biannual testimony between the House and the Senate between Wednesday and Thursday. The testimony itself is pre-prepared. That's not really the portion to look for. The part that's going to matter is the question and answer process that follows. So traders will really be looking for his response to whatever questions are thrown at them to kind of get clues on where the Fed might be headed next. Beyond that, the jobs report this week is a big deal. Then non-farm payroll Friday. Pretty much Monday's a little bit light, but then there's a major event every other day of the week this year, or every other day of the week this week. So it will be a demanding week, a week to really pay attention to what's going on in the news cycle. But nothing to worry about. You know, with the news comes volatility, and volatility is what brings opportunity to make money.
Yeah, I'd also like to add, look, we're never really, the word isn't worried. We're never worried, right? We don't sit in a state of perpetual anxiety and fear when it comes to the markets. And that's all part of the psychology aspect that we're going to get into in a couple of minutes. Whether we get catalysts that takes us lower or higher, we know how to capitalize and make money from action in the stock market, right? The only time that, I'd worry is if the stock market was like done, closed forever. As long as the stock market is open, it really, truly for us does not matter whether it's going up or down, left, right, center. It's irrelevant, right? What matters for us is understanding, how to trade in any market environment. And that is what we do. And that is what you will learn as a member of True Trading Group. All right. Let's see here. Chris, talk to me about Tesla options for a second. How do you think Tesla options will move this week?
The options, just like with anything, it's going to entirely depend on the movement of the stock itself. Tesla is always one of the more volatile stocks. The options are always volatile. The big level is 200. If we can see the market push higher, then Tesla needs to get back above the $200 level. If not, then we're looking back towards 190 if we see a slide in the overall market. I'm not sure of anything specific to the company, but of course, if there's any sort of news or anything Tesla specific, that will increase the volatility in the options as well. But other than that, I do expect higher volatility pretty much across the board, just with all the major events happening elsewhere. So,
all right, excellent. And let's go into this. What do you think about coin for this week?
It's going to be interesting. Last week, a lot of the crypto names were down significantly as Bitcoin started pulling back, but Coinbase held up. Coinbase had news. They purchased a crypto hedge fund. But then there's also news out this weekend with Silvergate SI closing their crypto trading platforms. So, I'm not too much big on that sector, but I think coin is more or less going to trend with the overall market. Real quick look at the chart. I mean, obviously you want to hold Friday's low down at 62 to continue the uptrend. So I think as long as 62 holds, coin can continue to climb back.
Nice. I got a follow-up question to that, Chris. What's going on with SI? Do you think they're going to go out of business? And if so, is that a net positive or net negative for coin?
I haven't been following it so close. I know that they were overexposed to the downfall of FTX. So they had a lot of money involved there. We're talking billions of dollars pretty much just gone. So I don't know. I do know the company already holds substantial debt. It's going to be very hard for them to kind of eat that loss, but they are involved in some of the legal proceedings and everything now. So it's really up in the air what's going to happen with them.
Mm-hmm. All right. Anyone else? Just go ahead. Real quick. But if they go out of business, do you think that's going to take coin stock lower? Probably, right?
Honestly,
maybe initially.
Yes, but I'm kind of thinking of the back end here. Coin with various competition out there. If one competitor goes away, then that's just inherently more market share for them, right? So it might be a negative reaction at first and just to the news overall, but in the long run, it may actually benefit them.
Okay. This one's from Jimmy Hart. He says, last week in chat, he asked you, why was SPY and DXY rising simultaneously for like 30 minutes? What was the glitch in the matrix? Could you elaborate on what you told me?
Yeah, I mean, typically you do see the dollar and SPY move inverse to each other or opposite. There was a period on Friday where they were kind of moving in unison, and really it's just volume. SPY is still going to move inherent to the volume that's coming into the name. Typically, it's a tracking mechanism for the S&P futures, but if you get a bunch of volume on SPY, it can step out of line. And same thing if you just have a really significant lack of volume, it can move away from what it would normally be as far as tracking. It's not going to stay just penny for penny, dollar for dollar inverse. So, there was a period where they were moving along. There was also some bond auctions on Friday. And I think that might be the reasoning as to why it kind of got a little bit out of line, just with the bond yields kind of shifting as those auction numbers came into the market. But it did quickly revert right back to proper tracking by the end of the day. So
nice. All right. Let's see what else we got here. Here's something good. How do you like Alibaba, the options for Alibaba, especially with China's economy starting to rise post-COVID?
Yeah, I mean, Alibaba, there's plenty of liquidity there, plenty of opportunity. Again, it's not really about the option itself. It's all about the chart and what you expect the stock to do. And then from there, we can take that information to the options chain and decide, is there value in the trade itself? Alibaba, I like the company. I think long term they do continue to grow. There's been a lot of political influence on the stock itself. They had a lot of disappointment, I guess we'll say, with Ant Financial. Alibaba was trying to spin off their own bank. And just a lot of political headwinds with the Chinese stocks. So it is one to be cautious about. They do get news from time to time that drastically moves the stock away from, kind of out of its technical levels. But yeah, it's whatever you anticipate the stock to do. Myself, here's the Alibaba hourly chart. It's kind of been in a downtrend. I do expect the S&P to decline. So typically you do see foreign markets tend to move opposite. So if we see SPY pull in, we could see a little bounce in some of the Chinese names as the American markets take a little bit of a hit. So it's definitely something to watch. I mean, to the upside, we do have resistance up at 93. Downside, the real support is the low at 87. So that's kind of the range I'd be looking at there.
Nice. And Baidu, for comparison, has been relatively stronger and has a huge resistance zone from 155 to 160.
Agreed. Yeah, and Baidu's been in the news recently. They're working on various AI applications.
Yeah, I was just going to ask you if you thought that had something to do with all this AI hype or anything else.
Yeah, I do. Baidu, and it's, not to make a political statement or anything, the company has been very well known to just kind of copy other technology and put it out under new names. So I do think they will come up with some sort of clone of whatever the best of the best is and call it something else and make a lot of money from it. That's what they do. So
excellent. Let's see what else we got here. Yep. So here's a question from Kyle Grabner. Grabner what? Just kidding. Mike shaking his head no in the background. We got to laugh. How would you recommend I get deeper into trading? I work in construction and I miss what the market does every day until I get home. Being new, I hate trading when I can't watch stocks move in real time. So I asked Kyle if he was a member, and he just responded that he is not a member, just following you guys and listening for months. Well, first off, to give you a real solid answer to this, right, Kyle, I'll leave it up to you. I can give you a very textbook quick answer, or I can give you I can ask you another question and give you like an actual answer. It depends on, what are you looking for? Do you want surfacey level, a confirmation bias, or are we looking for real answer here? Right? So you sound off. You let me know in chat. But assuming that you are looking for something real, the first question that I would, the first thing I'd want to ask you is twofold. Why do you want to get deeper into trading, and how serious are you about getting deeper into trading? Those are the two things that I would ask you. And depending on your answer, it would depend on my answer, right? It's like saying, looking for a real answer. Okay. Again, are you trying, why do you want to get deeper into trading, and how serious are you to get deeper into trading, right? It's like saying, it's like if I tell somebody I want to start MMA, well, am I looking to just get healthy and get fit, or am I looking to try out for the UFC? And then there's everything in between. So just really looking for, really looking for what it is that what your answer would be. But assuming, right, I'll give you this first, assuming that you want to get deeper into trading because you want to make more money, because you want more financial independence. These are typically the reason why people want to get more into trading. And then assuming that your answer is as deep as your schedule will allow you to go, right? What I will tell you is this: we have many construction workers that are members of True Trading Group. In fact, construction workers and military veterans, as well as people that are in the real estate industry, those three industries make up a huge part of our member base. Here's that: I'm wanting to get deeper, as in wanting to trade to be profitable, be able to read markets even better, and maybe not worry about placing a trade, even if I can't watch the stock move during the day. Fair enough. So it's all about finding a strategy that works for your life and schedule. What I'm referring to is something called trader identity. Trader identity is finding out the type of trades, the type of trader, everything that you need and want to be in order to be successful based around your life. Okay. The greatest misconception that that anyone has ever laid upon other people is that you can't be a trader or an investor if you do this, if you have this 9 to 5, if you have this schedule, if you have these kids, if you have this limited amount of money. All of that stuff is not true. It just isn't true. If it was true, companies like True Trading Group and financial YouTube as a whole would not exist, right? It would not exist. Now, there is no get rich quick. There is no overnight success. There is no, fortune and fame for investing $500 to $1,000, turn it into $1 million. None of that exists either. Okay. But can you be successful with a full-time job? Absolutely. Absolutely. And a busy schedule, right? TTG members, do you work a full-time job and still make money trading with True Trading Group? Sound off in chat. Let us know what you do for a living. Right? If TTG members, if you work a full-time job and still make money trading with True Trading Group, especially if you're in the construction industry, let them know you're not alone. Let Kyle know that he's where he's supposed to be. I should have stocked up on LaCroix before this. That's my fault.
And something I can add to that, part of the process when you're trading, you want to plan out your trade, so you actually being busy during the day, that could become a benefit for you, going through the charts in the evening, identifying the levels of where you want to act and having your orders in place. And so you've more or less automated your trading throughout the day. You can have a buy order in place. You can have a sell order in place. You can put everything there to where if it happens the way you planned it, your trade executes. If it does not, then no trade happens. You look at the charts again when you get home and plan out your trades again for the next day. Yep.
So, you can see all the, hopefully, I'm not going to read them all out, but hopefully you see everything that's coming through in chat. I'm not going to sit here and, we're not going to sit here and tell you that it's easy, that anyone, anybody can do it with a little bit of, a little bit of effort and $10. Like that, it's not true either. But many people do it as construction workers and superintendents and things to go, right? And I agree with Chris. I think that look, I'll tell you this much. I have watched over the years, I have watched close to 20,000 people come through True Trading Group, either as trial members or full-time members. Okay? What I will tell you is this. The ones that come in with the busy schedules and that are under PDT, which is the pattern day trade rule, those people tend to have the most long-term success. When you think about it, it's not that surprising, or it shouldn't be that surprising. These people come in here and they are forced to practice risk management. If not, they're going to blow themselves up and they're going to be out of the game overnight, right? So they have to practice risk management. They have to have an understanding of what they're trading. They have to take the small wins. They have to learn how to hold on to the gains versus somebody that comes in here with maybe a huge account and no real experience, and they get loose and fast with their trading and their money, and they can't, they have a big win but can't hold on to it, or they just throw too much and risk management goes to the wind. It really, I'm just saying, I've seen a lot of people come through. The ones that have had long-term success are overwhelmingly the ones that came in with the busier schedules, the full-time jobs, the ones that had, way less than 25,000 in a trading account. That's just the way that it is, because those people they don't have a choice. They're forced into making better decisions if they want to participate longer. And those that participate the longest, those that can stay in the game the longest, win, right? It's all about discipline and risk management. All right, we'll take one more question, and then we're going to get into trader psychology here. Let's see, what do we got? One more question, guys. Let's go. Ask anything. Pretend it's chat CRIS instead of chat GPT. Let's see. What do we got? All right. Well, if nobody has any other questions, we will move on here. Let's see. I feel like we're a little delayed on everyone's part. Let me go back and grab one real quick. All right, why don't I do this? Chris, I am going to go run and get a LaCroix from the fridge. It's going to take me 2 minutes. I'm going to ask you a question. You're going to answer that question. You're going to have to answer it for 2 minutes. Okay?
Yeah, all right.
How many years have you been trading for?
That's the 2-minute question.
No.
Oh.
That's just part of it.
I placed my first trade in 98. So what are we talking? 25?
All right. I want to know 25 years of experience. What are the top things you look for before you enter a trade? I'll be right back.
Okay. So, the top things I look for before entering a trade, I guess the easiest way to approach this would be to kind of run through what my morning process is. I definitely want to be trading something quality, so it's not very often I trade a company that I've never heard that name before or just have no idea what it is. I want to know where my money's going, what I'm getting involved in, what this trade is all about and the reasons why. So for me, I'm a big believer in putting together all three sides of the market, right? So you have the fundamentals, what's going on inside the company. You have the technicals, what's happening on the chart. And then you have social sentiment. How do other traders feel about that particular stock? So when I start my process, I don't use a stock screener. I actually start on a news feed. So I'm looking for a reason as to why is that stock moving. Typically, if a stock has news, that's also what brings volume, and those are all things we need to be able to make a trade. So I'm looking for news. Once I find something that has a headline or some reason for a stock to be moving, the first thing I'll do is try to assign a fundamental valuation to that news. So, an example I use often, if I see company XYZ got a $100 million contract, I look at the market cap, that's $1 billion stock. Right away, I know that's 10%. This move is worth, or this news is fundamentally worth 10% to the stock. So, how much has it moved? How much has it not moved? How much room's there for me? All of those things come into question then. If there's no fundamental value, then I'll go through and start my technical evaluation. From there, I always start on the longest time frame. I start on the daily chart. You have your 50-day moving average, your 200-day moving average. I give them the most weight simply because they incorporate the most information. It takes 50 days of information, 200 days of information to draw those levels. So I want to know where those numbers are. Automatically, 2 free levels just looking at the daily chart. And then, of course, are there any gaps on the chart? Where is support? Where is resistance? All those things. From the daily chart, I'll then move to the hourly chart and repeat the same process. Support, resistance, gaps, areas of interest. Then I move to the 3-minute chart. The 3-minute chart, I have trade line, VWAP. And then again, where is support? Where is resistance? So between the daily chart, the hourly chart, and the 3-minute chart, I've got about a dozen numbers now. And I'm looking to see where are those numbers kind of overlapping? Is that number showing up multiple times? That's what's going to give me confidence that this is the correct support level or this is the correct resistance level because I'm seeing it in multiple time frames. And then from there, I'll examine the options chain. Once I've figured out where my levels are on the stock, I'll move over to the options chain. I'll begin the process of evaluating which strike I want based on what I expect to happen with the stock itself. Typically, I'm buying an option that is currently out of the money, but if the stock moves the way that I think it's going to, that option will then move in the money. And then from there, I'm going to value it based on what is the intrinsic value of that option. So what I mean by that, an example I use, $10 price point, just because it's easy math. If I'm looking at a $10 stock and I think it's going to $12, I'm not going to buy the $12 call because the stock would have to move past $12 in order for that call to have intrinsic value. So in that example, I'll start to look at the $11 call. And right away, I know that if the stock does move to $12, that $11 call is going to be worth at least $1. So I value it based on that intrinsic value. What does it cost right now? If the option costs more than $1, there's no trade for me. If the option costs 95 cents, I'm not paying 95 cents to make $1. But if the option's, 50 cents or less, there's a chance for me to double my money. Now there's good value. I make the trade. So it's figuring out everything. It all started with a headline, just scanning news headlines and then moving into the chart evaluation, then moving over to the options chain. So moving through that whole process for every trade. And it sounds like a lot, but the entire process is probably a 90-second ordeal once you run through it and just do it. So I hope that helps.
I hope everyone's taking notes. I really hope everyone is taking notes here. And things are about to get a lot more in depth here for everyone. Let me just ask you this: if you guys are kind of digging this format tonight, giving Mike the night off, even though he's still watching from behind the scenes, like a little psychopath. But if you're still if you're enjoying the format that's here tonight, do me a favor, type the number 1, smash the like button, let us know in the chat. Let us know. That would be great. Awesome. Awesome. All right. All right. So what I'd like to know before we move on here, how many people on here right now are either brand new to trading, you're like brand new to trading, or you're not a member of True Trading Group? I'm not asking to go into a sales pitch. I'm asking because what I'm about to give you guys is massive, and I want to understand who I'm talking to. All right. So go ahead and type TTG in chat if you are brand new to trading, or if you're not a TTG member. Go ahead and type TTG in chat. Again, I put a lot of time and effort into this presentation. I want to know who I'm talking to. All right. C Trader, Manny Ramirez, Noah R, Maria Ramon. Okay, Kab Awanat from Pakistan, thank you. Parkash Bada, brother-in-law, Al Mariano, Jonathan Wilson, Muhir Elijah, Juan, Neen for real, Raymond Prate, Juan, Mark Edgerton, Pandu Raju, McDonald's is Big Mac. Says TTG. That's cool. All right. 50 shots. Boykin. Also my nickname in college. Fun fact. Okay. Listen up, guys. What we are going to do right now is we're going to cover 3 very, very important areas for you. If you're just joining us on the stream right now, I want to give you an update on what we just did. We're 51 minutes and 50 seconds into the stream right now. At the beginning of the stream, we talked all about what we expect to happen this week with the SPY. We talked about different levels. We charted it out. We talked about upcoming catalysts, and we went over our game plan. If this, then that. How are we going to make money this week? We talked about it. Then we did a Q&A session. We opened it up. We allowed people in the chat to ask their questions. We still have Chris Toner, who is a 2-decade pro trader veteran, on here with us, and we answered those questions. Now, what we are going to get into right now is we're going to cover 3 very important topics. Now, all TTG members, this ended up being a 10-page report. What I am going to do is tomorrow morning, or this evening probably, I am going to make this report downloadable as a PDF for all TTG members. Okay? But in the interim, we're going to go through and we're going to talk about it. Mike, I can see you picking your nose, dude. Turn your camera off. You look like Tom Hanks in Philadelphia, but like E.T. You know, like an Elliot version of the dude of Tom Hanks from Philadelphia. All right, we're gonna move on. There he is, right there. All right, Chris, how accurate of a description is that, though? You know,
I was wondering it, but then I saw the hood and I understood Elliot, and it worked.
All right. So the first thing we're going to cover is we're going to talk about how are trading and investing different from gambling at a casino. Now, most of you know that there's a big difference, but we're going to actually get into what makes this different. Because although people understand that there is a difference, there's a lot of people that, although they understand it, they kind of feel like, well, maybe on certain days it's not so different. And we're going to get into it. We're going to talk exactly why this is different. Then we're going to get into a big overview of trading and investing psychology. Okay, we're going to talk about what it is for, exactly. We're going to talk about the importance of trading psychology in your own trading success. We're going to talk about common psychological challenges in trading, including fear and greed, impatience and impulsivity. We're going to talk about overconfidence and ego. We're going to talk about loss aversion. We're going to talk about understanding the psychology of the market. We're going to talk about market sentiment and emotions, how to identify market sentiment, how to keep your emotions in check, right? Not just why it's important to keep your emotions in check, but actually how to keep your emotions in check, real world examples on how to do these things, okay? Then we are going to get into basically what are the top tools needed to be a successful trader. And that's going to be really important because, look, the psychology of trading and understanding how it's different from being a casino and all that is extremely important. But you could have an understanding, and on all my people that work construction in here can back me up on this. You can have the best understanding in the world on how to build a house. You can understand that first you need the foundation, and then you need the framing, and then you need the drywall and the electrical and the plumbing and so on and so forth. But if you don't have the right tools to do the job, you're not building a house. You're making a mess. That's what you're doing, even with the best understanding in the world on how to do these things. So you need to understand what your top tools are that you will need to be a successful trader. All right. So without further ado, let's get into it. And I really hope for those that are not TTG members that you are going to take notes. Okay. Because even though we're kind of being funny and we're winging it on here today a little bit, the information that's being given out here is really valuable. Okay. It's really valuable. And I'm not just saying that because I took the time to do it. I'm saying it because our members are making money off of it. That's how I know it's valuable. It's not valuable just because I believe that it's valuable. It's valuable because our members are making money off of it. I'll show you real quick. If you're a TTG member and you're making money at TTG, type the $ in chat. If you're making money trading at TTG, type the $ in chat. I want to see it. Go ahead and try and count the $ that are going to come through chat right now. It's going to be a lot of them. Okay. Excellent. Antronix says I'm up 74,000 year to date. I mean, the people that are typing the $ in chat right now, these are real people that are actually making money with True Trading Group. These are not bots. These are not, they're not paid to be here. These are people taking the time out from their Sunday to be here to get this information that have paid damn good money to be here. These people that you're seeing type the $, they've paid over $1,000 a year to be a part of this group, but it's paying off because they're making money. I don't need to drink my own Kool-Aid. I can let you serve it to them, or I can let them serve it to you. You know what I'm saying? What I'm trying to show you is that it is the information that we are giving out and the stuff that we are doing is extremely valuable and should be paid attention to, especially going forward. So without further ado, let's get into it. All right. How are trading and investing different from gambling at a casino? All right, let's get into it first. Trading and investing are different from gambling at a casino in several ways, and here are some key differences. The first difference is going to be probability. Gambling at a casino is based on probability, where the odds are stacked in favor of the casino. Trading and investing, on the other hand, involve analyzing market data and making informed decisions based on economic fundamentals and market conditions. Okay? Again, probability versus analyzing market data and making informed decisions. It's very hard to make an informed decision at the blackjack table or at the poker table. It can be very hard to make informed decisions because you're not, the information is limited. You're playing the probability. You're not analyzing market data. You're not making informed decisions based on economic and fundamental and market conditions. Next, risk. Gambling at a casino is a high-risk activity, right? No duh. With the potential of significant losses in a short period of time. Trading and investing also obviously involves risk, but it can be managed through risk management strategies, such as a stop loss or diversification. Toner, if maybe you want to talk real quick about what a stop loss is and the importance of a stop loss.
Yeah, I mean, a stop loss is what defines your risk in the trade. You have to know where your stop is before you take the trade, because that's also going to determine what your position size should be. It's a very integral part of risk management.
Excellent. So again, moving forward, we're going to talk about, in ways that it's different. Let's talk time horizon. Gambling at a casino is a short-term activity, or should be short-term activity, with results determined quickly, right? You don't need to wait too long to figure out if you're going to hit blackjack playing blackjack, but if you're getting into a Tesla trade that's a swing trade, you may need to wait a bit to see the result of that trade. Okay, so time horizon. Trading and investing, on the other hand, are typically long-term activities with the potential for significant returns over time. Information. Gambling at a casino is largely based on luck and chance, with little control over the outcome. Trading and investing, on the other hand, involves analyzing and interpreting economic data, financial statements, and other market information to make informed decisions. Again, there's that phrase, informed decisions. When you think about the ways that the stock market is different from a casino, you have to think casino is probability, stock market, informed decisions. Right? Would you agree, Chris?
Yeah, for sure. I mean, it's you control the amount of risk that you're placing. You can take all of the information and decide exactly at what point is that no longer valid. That is your risk amount. That is your stop limit. When the pattern is no longer valid, when the trade is no longer moving in your favor, where are you going to stop? Where are you going to get out?
Mm-hmm. So trading and invest, and then obviously skill, right? Skill. Successful trading and investing require a level of skill, knowledge, and experience. Gambling at a casino, on the other hand, again, largely based on probability, chance, and although some poker players would highly defend this, it takes a lot less skill to be a gambler than it does to be a trader. So these are the fundamental ways that that trading and investing differ from a casino, and it's really important that people that are brand new, or people that that are just getting started, whatever the case, that people understand this, that people internalize this, because a lot of people have been burned in the past by treating the stock market like a casino, and therefore write it off as such. Okay? So if this makes sense to you and you understand where I'm coming from with this, type the number 1. Let me know that we're on the same page before we move forward. All right? Let's see. Just type. Excellent. Very cool. All righty. Now, let's move on. All right, let us move on. We have trading and investing psychology. That is up next. Okay? This is going to be very, very in-depth. I need you guys to take out pencil and paper, and I need you to start paying attention. If you weren't already, now's the time to pay attention. Chris, take over for 1 second. Or just, guys, give me 1 sec. Be right back.
Yeah, I mean, trader psychology is the most important part of trading. I mean, reading the charts and finding the levels. Once you've gotten through that process, everything comes back to the psychology side of it, and actually sticking to your plan and following through with what you've created,
Yep.
I think that in some ways, the longer you trade, the larger psychology becomes part of the trading. Because once you learn the charts, it's sticking to it, sticking to your plan. It doesn't change. You're still supposed to find support, find resistance, create your risk tolerance, all of those things. So the psychology becomes even a bigger factor the longer you trade.
Let's get into it. Trading psychology. Trading psychology refers to the mental and emotional factors that influence a trader's decisions and behavior when buying and selling financial assets such as stocks, currencies, or commodities. The emotions and thoughts that traders experience can impact their trading decisions, sometimes leading to irrational and impulsive behavior that can create losses. Okay? I'm sure that if you are even remotely trading right now, or even just starting to get into trading, I'm sure that you've already gotten a little bit of a taste of how of how this can manifest, right? Trading psychology encompasses a range of challenges that traders may face, such as fear, greed, overconfidence, and impatience. These emotions can be triggered by a variety of factors, including market volatility, news, and personal circumstances. Understanding trading psychology is important for traders who want to be successful in the long term. By recognizing and managing their emotions, traders can make more rational and informed decisions, minimize the impact of cognitive biases, and improve their overall performance. Techniques such as mindfulness, self-awareness, and risk management can help traders maintain a disciplined and focused mindset when trading. Now, let's talk about the importance of trading psychology in trading success. Trading psychology is critical to a trader's success because it influences their decision-making process and their ability to manage risk. Trading is inherently emotional, and emotions such as fear, greed, and overconfidence can lead traders to make irrational or impulsive decisions that can result in losses. Successful traders understand the importance of managing their emotions, maintaining a disciplined mindset. They are aware of their psychological biases and work to overcome them so they can make rational and objective trading decisions. This helps them to avoid emotional decisions based on short-term market fluctuations and instead focus on long-term profitability. Traders who neglect their psychological well-being may find themselves making poor decisions based on impulsive emotions or overconfidence, leading to losses and missed opportunities. In contrast, those who prioritize their mental and emotional health and develop their discipline to manage their emotions are more likely to succeed in the long term. In summary, to wrap this part of it up, trading psychology is important for a trader's success because it impacts their decision-making, risk management, and overall performance. And by cultivating a strong and disciplined mindset, traders can maximize their potential for success in the markets. Now let's dive a little bit deeper into the common psychological challenges for trading, right? Fear and greed, okay? Fear and greed are going to be the top common psychological challenges in trading, all right? At some point, I am sure everyone in here has experienced some form of fear and some form of greed. I'm sure of it. Fear and greed are two of the most common emotions that traders experience. They can represent significant psychological challenges when it comes to trading. Here are some ways in which fear and greed can impact a trader's psychology. Let's talk about fear for a moment. Fear is a natural emotion that helps us to avoid danger. But when it comes to trading, it can be a huge hindrance. Fear of loss can cause traders, or fear of loss or fear of missing out can cause traders to hesitate or avoid taking trades altogether, leading to missed opportunities. Alternatively, fear can cause traders to exit trades prematurely, cutting their profits or incurring unnecessary losses, right? Now, to dive into greed a little bit, greed is obviously a desire for excessive gain or profit that can lead traders to take an unnecessary risk in the hope of making profits. This can lead to overtrading or taking on larger positions than the trader can manage, leading to potential losses that could have been avoided. I am sure everyone at one time or another in this chat right now has been in a position where you've been up a tremendous amount on paper and your greed has not allowed you to hit the sell button. I'm sure of it. You know, I mean, it is a normal thing that happens to traders. That happens to people. It's totally common, right? Now, fear and greed in combination, right? Fear and greed really go together a lot of the time, right? Fear and greed can also work together to create a boom and bust cycle. A boom and bust cycle. When traders experience a successful trade, they may become overconfident and greedy, taking on more risk on the next trade and making impulsive decisions. Conversely, after experiencing losses, traders can become so fearful and hesitant that they avoid trades and miss out on what could have been great opportunities altogether. Right? So what I want to say here is also, you know, we have at True Trading Group, we have a 7-day trial membership. It gives you 7 full days of access to our chat room, to our trade alerts, to some sample courses that are really just kind of small intro courses, and we give you access to some tools. But I have seen thousands and thousands and thousands of trial members come through. And speaking to this part, right, is people want to know that, you know, they come into the trial and they say, okay, well, if I can make money during the trial, then I know you're for real and I'll sign up for a membership. And the thing of it is this, is even if you were to make $1 million during your trial membership, how do you know you're not in the boom part of the boom and bust cycle? How do you know that you didn't get lucky? How do you know that? How do you know? You don't know. You don't know. A broken clock is right twice a day. Okay? Even the worst traders on the planet, the dumbest, most ignorant, unprofessional, risk-averse traders on the planet can hit a winning trade. What you want to know is, can they hold on to it? On the next trade, if the next one is a loser, can they lose properly to minimize the loss so that they can stay in the game? That is what is important. So we you know, when you come into, you know, our trial, we really pay attention to you. If you're, you know, we pay attention to the type of questions you're asking. We pay attention to the type of trades that you're interested in. We even have one of our salespeople, you know, obviously reach out to you, and then they reach out to you, and we mark down your response when asked, "Are you ready to join?" Most people will say, "No, I'm still testing it out. I'll be through." But the people that say, "I need to see if I can make money with this first," those people we don't ever even follow up with, because we're not going to convince those people that that mindset is incorrect, and they're not going to be convinced that they need to learn first, trade second, and profit third. Unfortunately, that is the battle that's here. A lot of the people that join True Trading Group full time are those that have had this experience over and over again, this boom and bust cycle, and they're just tired of reliving it over and over again. Something else has got to give, right? It's unfortunate, but those that are beaten down are the ones that usually kind of give in. They're willing to spend the money. They're willing to put their, you know, their effort in and want to, you know, and want to try something different. And they end up usually being successful. Now, to overcome the psychological challenges, right? To overcome the psychological challenges presented by fear and greed, traders must learn to manage their emotions and make rational decisions based on their trading game plans. We teach you how to make a trading game plan based around your trader identity. No, this is not an overnight process. It's not like a checklist, but it is courses, and it is going through and showing you this is how to make a trading game plan. This is based upon your lifestyle. This is most likely the best way to find your trader identity. Based upon all of that, here's your risk management strategy. Traders can do this by identifying their emotional triggers, practicing mindfulness and self-awareness, and following a disciplined approach to trading. By doing so, they can avoid the pitfalls of fear and greed and improve upon their chances of success in the markets. Okay? Emotional triggers. Everyone in here has shit that sets them off. Whether it's your kids screaming in the background, your boss not giving you a break, whether it's, you know what? Every time I follow an alert, I get the wrong one, right? Every time I follow an alert, I get the wrong alert. I pick the losing alert to follow. Or, you know what? If how many does this sound familiar? If I'm going to get into this trade, right? If I'm going to get into this trade, then it must be going the opposite direction. And people allow themselves to get emotionally triggered. And the second that you're already starting to think in those ways, so if you're already starting to think, hey, if I enter this trade, I know it's going to go the other way, but screw it, I'm here, I might as well give it a go, you shouldn't enter that trade. You shouldn't enter it. You're not in the right mindset. Don't enter the trade. If you are angry or resentful at other people's success in the market, and you are blindly revenge trading from a previous loss, don't enter the trade. You have to think of it almost as if you're getting ready to, I don't know how many of you ever played a sport, but it's almost like preparing to play a sport. You got to get your head right. You got to make sure that you understand that there are X amount of quarters in a game, and that not everything is won in the first period. You got to keep your wits about you. You got to keep your head on. So, guys, give me a little bit of feedback. Has this been beneficial so far? We're about halfway through. Another 15, 20 minutes, and then we'll get into trading tools, and we'll wrap it up. But is this being beneficial to you guys? Just sound off. Let me know if there's any value being given here. I want to make sure you guys are getting value. Go ahead and smash that like button also if you're getting value from this. Okay.
I really like the sport analogy. I hadn't heard it described quite like that before, but the more I think about it, it really is. And the preparation and the strategy and the planning that goes into being successful. That was really great.
Yeah. Thank you, man. All right, let's talk about impatience and impulsivity. Two things I know everyone does not struggle with, right? I'm sure everyone on this live stream is the most patient and non-impulsive behavior person ever. Okay? Just joking. Impatience and impulsivity are common psychological challenges that traders face when buying and selling stocks, options, any sort of financial asset. Here are some ways in which impatience and impulsivity can impact a trader's psychology. Let's start with impatience. Impatience can cause traders to rush into trades without proper analysis or preparation. This can result in poor trade entries or exits, which can lead to losses. Additionally, impatient traders may be more likely to engage in overtrading, which can increase their risk and lead to burnout. Okay? Impulsivity. Impulsivity can lead traders to make hasty decisions based on emotion rather than logic. And remember, probability versus informed decisions. If you're making an informed decision, you have to rely on logic. If you're relying on probability, you're relying on chance. This is the difference between a casino and the stock market. So it is very important that impulsivity remain in check, right? Impulsive trading decisions that are not based on sound analysis or market fundamentals. Impulsive traders may also be more likely to ignore their trading plan or risk management strategy, which can result in unnecessary losses. Impatience and impulsivity as a combination, right? As a combination. When traders experience impatience and impulsivity together, it can be particularly challenging. For example, an impatient trader may enter a trade impulsively without proper analysis or risk management, resulting in a quick loss. To overcome the psychological challenges presented by impatience and impulsivity, traders must learn to slow down and think before making trading decisions. This can be accomplished by following a well-defined trading plan. Again, we will show you how to do this at True Trading Group. That includes a thorough analysis of current market conditions, risk management strategy, and clear trade entry and exit rules. Additionally, traders can practice mindfulness and self-awareness to identify their emotional triggers and develop a more disciplined approach to trading. By doing so, they can avoid the pitfalls of impatience and impulsivity, and improve their chances of success. I also want to stress that impatience and impulsivity are common psychological challenges that traders face when buying and selling financial assets. So I don't want you to feel like this is, something. I mean, I'm sure you guys know. Now, let's see. Next thing we're going to get into here is we're going to get into overconfidence and ego. Overconfidence and ego. Two things I don't suffer from in the bedroom, right? My self-esteem is at an all-time low when it comes to there. You can thank Mrs. Hyman for that. Just kidding. Now, overconfidence and ego. Overconfidence and ego can present significant psychological challenges when it comes to trading. Here are some ways in which overconfidence and ego can impact a trader's psychology. Overconfidence. Overconfidence can cause traders to overestimate their abilities or knowledge and underestimate the risks involved in trading. This can lead to taking on excessive risk, ignoring risk management strategies or market fundamentals, and making impulsive or irrational decisions. Right? Ego. Ego can cause traders to become emotionally attached to their trading decisions. Let me repeat that for all of you that are former apes or meme stock connoisseurs. Ego can cause traders to become emotionally attached to their trading decisions. I'm going to just do it one more time. Ego can cause traders to become emotionally attached to their trading decisions, leading them to hold on to losing trades longer than necessary or avoiding taking losses in order to avoid admitting they were wrong. This can result in unnecessary losses and missed opportunities. And one more time. Ego can cause traders to become emotionally attached to their trading decisions, leading them to hold on to losing trades longer than necessary or avoiding taking losses in order to avoid admitting they were wrong. This can result in unnecessary losses and missed opportunity. I'm sure no one here can relate to any of that, but I'll just keep going. Hopefully someone will get something out of this. Overconfidence and ego in combination with one another. Well, this is great. You guys ever see Ghostbusters 1 and you had the gatekeeper and the keymaster and they got together and it was like the end of the world? That's kind of what overconfidence and ego is when it comes to trading, right? That was a good reference. You got that one, Chris? Yeah? It's fantastic. Overconfidence and ego in combination, when traders experience both overconfidence and ego, it can be particularly challenging. Don't worry, I'm not having a stroke. For example, an overconfident trader may be more likely to hold on to a losing position due to their belief that the market will eventually turn in their favor, like the mother of all short squeezes. Even when market conditions suggest otherwise, the trader's ego may make it difficult for them to admit that they were wrong and take the necessary steps to cut their losses and move on. Weird. To overcome the psychological challenges presented by overconfidence and ego, I see what you're doing, Joe, and I'm greatly impressed. Let me know. To overcome the psychological challenges presented by overconfidence and ego, traders must learn to develop a more objective and disciplined approach to trading. This can be accomplished by practicing self-awareness, acknowledging and learning from mistakes, and following a well-defined trading plan that includes risk management strategies, clear entry and exit rules, and additionally, traders can seek feedback from others. Really? From others? Yes, from others, Adam, such as a mentor, crazy, or trading community, to gain an outside perspective on trading decisions. By doing so, they can avoid the pitfalls of overconfidence and ego and improve their chances of success in the markets. I want to touch on this for a second because I feel like this is a very important part. Confirmation bias. How many of you in here, type the number 1, if you were a staunch defender of all things meme stock at one time or another? Type the number 1 if you were like a real defender of like the meme stock movement at one time or another. Go ahead, just type the number 1. If nobody types 1, I'll call names because I know some of you that are here that were. You all are lying. Okay? I know that it's more than 2 people, so let's just get honest. Well, I'm using that as an example. Joe, put that on the screen right now. That is exactly what I was talking about. This is the result of ego and confidence. Okay? You put them together, you literally have the end of New York City. All right? That is ego and confidence. That is how detrimental that is to your trading. Okay? Now, for those of you that have no idea who those 2 people were, you're probably far younger than any of us here. Okay? Just Google Gozer and come back later. All right? Now, what I want to talk about here is when you're on social media, you're getting a tremendous amount of confirmation bias because everyone's saying the same stuff. When you're part of a responsible community that actually gives a crap about what it is that you are doing and your success because everyone wants to win together, you're going to hear some things maybe you didn't want to hear. Maybe you hear things like, hey, AMC is not going to $1,000, bro. You know, or GME is not going to $2,000. Or maybe you shouldn't second mortgage your home to buy more of that stock. Maybe you shouldn't pay $20,000 for that master course that promises to make $1 trillion. I mean, being a part of a real community, you want to talk about, and we can get further into that in a minute, but you know, before I go further into that, let's talk about loss aversion real quick. Right? Let's talk about loss aversion. Loss aversion is a psychological phenomenon that can present significant challenges for traders when buying and selling financial assets. Here are some of the ways in which loss aversion can impact a trader's psychology. You have fear of losses, right? This can lead to missed opportunities for profit and failure to capitalize on market conditions. You have reluctancy to cut losses. This type of loss aversion can also make it difficult for traders to cut their losses and exit a losing trade. For all of you that are holding bags, right? You have to think, is that whatever money is sitting in that account, is it worth leaving there? Is it worth getting that capital out to then move forward into another area? Right? This can cause traders to hold on to losing positions longer than necessary in the hope that the market will turn in their favor, which can lead to larger losses. And then, of course, you have regret avoidance, which is another type of loss aversion that can also cause traders to avoid taking risk that may lead to regret. This can lead to missed opportunities for profit and a failure to capitalize on market conditions. To overcome the psychological challenges presented by loss aversion, traders must learn to develop a more objective and disciplined approach to trading. This can be accomplished by practicing risk management strategies, following a well-defined trading plan, and using technical analysis to identify clear entry and exit points. Additionally, traders can use trading journals, which we have one of the best at True Trading Group, to track their progress and learn from their mistakes. By doing so, they can avoid the pitfalls of loss aversion and improve their chances of success in the market. Okay? Now, let's talk about, and I'll summarize this up because we're going on for a little while, but it seems like most of you guys are enjoying this. Again, real quick, you guys enjoying this? Is this beneficial? Type the number 1. Let me know. I got a little bit more to go, and then we're done. What do you guys think so far? Keep going? Good stuff? All right, cool. Now, let's get into understanding the psychology of the market. Psychology of the market. Let's talk about market sentiment and emotions. The emotions of traders and investors can impact the overall sentiment of the market, leading to trends and volatility. We all see that on a day-to-day basis, especially now. Understanding the sentiment of the market can help traders anticipate changes in direction and make more informed trading decisions. Identifying market sentiment can be challenging as it involves gauging the emotions and options of a large number of traders and investors. However, there are several methods that traders can use to gain insight into market sentiment. Here are some of the best ways to identify market sentiment. Ready? Here are some of the best ways to identify market sentiment. First and foremost, technical analysis. Technical analysis involves analyzing market data such as price and volume to identify trends and patterns that may include changes in sentiment. For example, an uptrend in the stock's price may indicate a bullish sentiment, while downtrend may indicate a bearish sentiment, right? Pretty simple. News and media analysis. Traders can also monitor news and media outlets to gain insight into market sentiment. Positive news and reports may indicate bullish sentiment, while negative news and reports may indicate bearish sentiment. Social media platforms can also be a source of sentiment, as traders and investors often share their opinions and views on financial markets and assets. Sentiment indicators. We just so happen to have a real-time social media sentiment indicator inside of True Trading Group for everyone. Very good, Joe. Sentiment indicators are a tool that measure the overall sentiment of the market or a particular asset. For example, the put-call ratio measures the ratio of put options to call options traded in the market, in the options market, which can indicate whether traders are bullish or bearish on a particular asset, right? And then you have, by using these methods, traders can gain better understanding of market sentiment and make more informed decisions. It's important to note, however, that market sentiment is not always accurate or reliable and should be used in conjunction with other forms of analysis and risk management strategies. Controlling emotion while trading is essential for success in the markets. Here are some of the best ways to manage your emotions when trading. Again, here are some of the best ways to manage your emotions when trading. Practicing mindfulness and self-awareness. Mindfulness and self-awareness can help traders recognize their emotion and develop more objective and disciplined approaches to trading. Developing a trading plan and sticking to it. Risk management and position sizing. Learning from mistakes and keeping a trading journal. Seeking support from a trading community or mentor. By implementing these strategies, traders can learn to control their emotions and develop a more disciplined approach to trading, right? Now, the last two things I want to touch on before we get into the tools that are needed is I want to touch on behavioral finance and market inefficiencies and the role social media and social influence play. Behavioral finance is a field that explores how psychology biases can impact financial markets. For example, herding behavior, not hurting like I'm getting hurt, but herding like herding cats, which is kind of like how I feel in chat sometimes with some people. That's funny, a little funny. I have nibbles, Greg. Can you milk me? For example, herding behavior can lead traders to follow actions of others when it may not be rational to do so. This can create inefficiencies in the market that traders can take advantage of through technical analysis and other trading strategies. Very important. All those times people are like, why is it moving up? Why is it running? Why is it running? Why is it running? And you're like, we have no idea, but we see a bunch of people just following the leader for no reason. That is behavioral finance and market inefficiencies. If you're aware of these things, if you know where to look, which we teach you how to become aware, we teach you where to look, we teach you how to pay attention to these things, we teach you how to use it to your advantage. You don't want to be part of the herd. You want to take advantage of where the herd is going. Okay? The role of social media and influence. The media and mainstream media, social networks, these can all impact market sentiment by influencing the emotions and actions of traders and investors. Understanding the influence of media and social networks on the stock market can help traders anticipate changes in direction and make more informed decisions. You, in my opinion, do not want to be anyone that follows something on social media. You want to use social media as a tool so that you know where to look and you know how to make your own trading plan and stick to it. In case you haven't noticed here, Minna, one sec, guys. One second, guys. Okay, sorry. I'm now on my fourth LaCroix, so that's how you know it's been a heater of a Sunday stream. Let's keep going. All right. Now, let's get into the tools of the trade. All right? The tools of the trade. What you need to tie this all together and become a successful trader. All right? Before we do that, I would like to see how many people that are not a True Trading Group member are still here, still paying attention, that have been here the whole time. Make me feel better about giving up part of my Sunday. Go ahead, type TTG in chat. If you're not a member of True Trading Group and you're still here paying attention, go ahead and type TTG in chat. Let me know that you got something out of this that way. All right. Jonathan Wilson, Gary E, Benz 951, Luke Parent, Sunflower, Atlas Michael, that Buckaroo. That's funny. Anyone else? Maganda forever. All right. Well, there's like four, oh, there we go. My brain got popped today. Thank you. No worries. Anyone else watching that potentially, anyways, we'll continue. Let's talk about the tools of the trade that you need. Okay. First and foremost, you're going to need a reliable trading platform. That's why True Trading Group does not recommend Robinhood. No, all joking aside, we don't endorse any trading platform. But you will need a reliable trading platform. A reliable trading platform is essential for executing trades quickly and efficiently. Looking for a platform that is easy to use, a platform that offers real-time data and analytics and provides a range of trading tools and order types. What I can tell you is this. The vast majority of people in True Trading Group, the platform that they are using is going to be Webull, Thinkorswim, and then TD Ameritrade. I know Thinkorswim and TD Ameritrade are the same company. Two different platforms, though. TD Ameritrade has the online version. Thinkorswim, has an online version also, but it's a little bit different. So, yes?
I just puked.
Okay, tell mommy, please. I'm almost done. All right, my dog just threw up. Kids are freaking out, but we're good. We're going to stay the course here. I'm just going to lock the door. 1 second. All right. See? This is the real show. Interactive brokers, E-Trade, these are all very good. Interactive brokers, tends to be a little bit more on the complicated side, but they do have good execution. Hold on 1 second. All right, so to continue here, you will also need, so part of the thing here too is that the only thing you really need to look for in a reliable trading platform is you need the trading platform to offer good execution. Okay, good customer service, good execution, and easy to navigate. Ease of navigation, good execution, decent customer service. That's what you're looking for. If your brokerage firm has that, stay where you are. Stay forever. Okay? That is what you are looking for. All right? Now, your brokerage firm, if it's good, will be focused. If your brokerage firm is good, it will be focused on those things. Okay? It will be focused on those things. It will not be focused on everything else. What is everything else? News and data feeds. I hate to break this to you, but not all news, when it comes to the stock market, not all news services are created equal. All right? I mean, there's a lot of people out there that use Yahoo Finance to get their news, to check for news, that use Google Finance or Google News, or that wait till they see it in the feed of their brokerage firm. By the time you see it on Yahoo Finance or inside of your Robinhood feed, it is too late. That news has already been out, sometimes upwards to 15 to 20 minutes. Sometimes as short as a couple of minutes, but sometimes as long as 15 to 20 minutes. By the time you get to that news, you're already looking at direction on that stock, and the move is already taking place, and you're late to the party. And then you got to contend with all of those emotions and all of those things that come into play there. And I'm sure this sounds familiar to some people. Okay? Access to real-time news is a necessity. If you're trying to swing trade or day trade or participate in any sort of long-term investing without access to a real-time news feed, you shouldn't be doing it. right? It shouldn't be happening. Yahoo Finance is not where to go to get it. There are a couple options. Benzinga Pro has their real-time news feed, and in my opinion, they are second only to a Bloomberg terminal. And normal people like you and I do not need a Bloomberg terminal. It's very expensive, and it will just be completely underutilizing it. But the real-time news feed from Benzinga, spot on. It's customizable. It gives the news in real time. Yahoo Finance and most brokerage platforms are pulling their news from Benzinga's news feed. It has a squawk. It reads the news to you in real time. That's where it's at. Okay. Now, charting. You need a really good real-time data platform. This is something else that you guys may find hard to believe, or maybe choose, to ignore. But not all real-time data is real-time data. For example, there is real-time data that is low latency, tick-for-tick data inside of different platforms. Now, every platform is going to show you the proper or the most recent buy and sell in a stock, or the most recent top-level options chain data. But when you're talking about depth, right? Traders and investors a lot of times look for market depth, or what they call the full book of orders on the buy side and the sell side, or the bid and the ask. That data, getting that in real time, tick for tick, especially when you're day trading, is second to none. Your brokerage firm by default is not going to offer this to you. And even when they do, they're selling you a watered down version of it for an additional $20 a month. It's not the real stuff. You're getting imitation. Your Coke is getting cut with baby powder. Just seeing if Chris is paying attention. Okay. That was a joke. We don't condone the use of drugs here, obviously. There are companies that exist, such as there's a company called Scans, right? That scans with a Z at the end. And then there's a company called Quote Media. And then there's a company called Polygon. Those three companies are fantastic for real-time data, for full level 2, full options and equities data. It is a little costly, but again, these are the tools of the trade. Having a brokerage account and following some YouTube channels is not enough if you're trying to be serious about it. Okay, there are some tools that you are going to need. The trading platform, the real-time news feed, the charting, charting, I'll get to that in a second, but the real-time data feeds, those are big. Anyone that is a trader that makes money at this for real, they have these tools. You need to have them too. Even if you're just starting and you don't know how to use them, you need to get them and you need to learn how to use them. That's first and foremost, because learning about technical analysis doesn't mean crap if you don't have access to real-time data so that you can technically analyze it. So it's all, trying to determine move based on market sentiment without access to real-time news means nothing. So yeah, these things get a little pricey. You have, these news feeds can cost anywhere between $1,200 and $1,400 a year. The data feeds are about, anywhere between $800 to $1,000 a year. And then you're going to need really good charting. Thinkorswim has a decent charting platform. Webull has a decent charting platform. But honestly, you want to talk charting? Let's get real honest here, man. TradingView. For those that haven't used it, TradingView, that's the go-to. That's the quintessential charting platform, and hats off to them. They've built a hell of a platform. They offer a free version, but they also offer a paid version that comes out to, I think it's like $700 to $900 a year. It's really good, right? It's really good. Charting and technical analysis tools can be very helpful to identify trends, patterns in the market and make more informed trading decisions. Not all charts are created equal. Okay. You're going to need risk management tools. This is going to be the ability to enter stop losses, limit orders, understanding what they are. You're going to need a really good trading journal. Now there are softwares online, but really the best, trading journals are the ones that are, created with dynamic spreadsheets, so that you can enter your stuff and it updates automatically and so on and so forth. These are great. And they're highly customizable and they're not too fancy and they're not too expensive. But you need one. Then obviously education and support. Ongoing education and support are important for improving trading skills and staying up to date on the market trends and developments. Looking for a trading community or mentorship program that offers access to experienced traders, live trading webinars, and other educational resources. These are the tools that are needed in order for you to be a successful trader. This is what you need, right? This is what you need. I am also proud to say that True Trading Group, what makes us different from every other platform that's out there, is not only our traders and our alerts and our chat room and our courses, but what makes us different is that we offer, when you sign up for True Trading Group, you get Benzinga Pro's news feed included in your 1-year membership. You get TradingView's premium charting software included in your membership. You get Quote Media's real-time level 2 and full book data included with your membership. You get a great trading journal, social sentiment scanner, everything. These are massive, massive tools that cost a tremendous amount of money that you get access to for being a member of True Trading Group for the year for one price. There are no upsells for any of these things. So this is what makes True Trading Group different, right? This is what makes True Trading Group different. Does anybody have any questions? Does anyone have any questions? Anyone? Okay. What I would like to know one more time before we pack it up, how many of you here, again, are not members of True Trading Group? How many of you here are not members of True Trading Group and would like a free membership to True Trading Group? If you're not a member to TTG and you want a free membership to True Trading Group, type TTG in chat. Not a member to True Trading Group and you want a free membership to True Trading Group for the whole year, type TTG in chat. Okay. Here's what I'm going to have you do. Anyone that wants a free membership, here's what I'm going to have you do. What I want you to do is go to the following website. It's ttgthree.com. That's ttg3.com, spelled out. ttgthree.com. This is our trial page. What I'm going to do for people that sign up for the trial this evening is as follows. If you sign up for the trial tonight, anytime before 9:30 tomorrow morning, at noon tomorrow, I'm going to invite all the trial members into a separate chat room. We're going to put everyone's name in a big wheel called Wheel of Names, right? Like a virtual wheel. We're going to spin the wheel, and whoever it lands on, I'm going to give a free 1-year membership to True Trading Group. There's no catch. There's no anything. The fact that there are so many people that are still on here that are not members that showed enough respect to be in here and get the information that we're giving out tonight, I want to do a little something for you guys. Instead of just going through a big sales pitch, I want to go ahead and I want to offer you the chance to join the family for free. Okay? What I need you to do, though, is I need you to go to ttgthree.com as soon as you can. You're going to put in your first name. You're going to put in your email. You're going to put in your phone number. Then you're going to click, yes, I want this. Occasionally, it'll ask you to, validate that you're a real person. Okay. Then it's going to take you to an application. Why do we have an application? We have an application because we get a tremendous amount of people that just sign up for our trial to get trade alerts, or maybe their head's in the wrong space. We want to make sure that if we're putting effort towards people, that we're putting effort towards the right people. We don't want to waste your time. We don't want you to waste our time. We want to make sure everyone's here. Okay? So once you go through that application, a lot of times, most of the time, you will get approved. Okay? Very few people do not get approved for that application. Then you get taken to our checkout page. I want to specify this. Please hear me. This is a $3 7-day trial. At the end of the 7 days, you are not rebilled. There is no auto upgrade. There is nothing to cancel. It simply expires. You are never charged another $1 again. Why do we charge the $3? I want to know that you're a real person. You could tell me you're a real person, but if you pay $3, you have to be a real person. Have to be. This mitigates people coming into chat and spamming and coming into the platform and causing an issue. If you're paying $3, there's a better chance that you're a real person. If the $3 is too much money for you, or you're concerned about it, whatever, I don't know what to tell you. It's $3, right? Like, it's not that big of a deal. We charge the $3 to make sure you're a real person. You are never charged again. You do not have to cancel anything. There is no auto upgrade. It does not renew at a higher price. There is nothing. It is just a one-time payment of $3. So on this page, you put in your name, your email, you create a username, you create a password, you enter your payment details, and that's it. Then you get immediate access to the platform as a trial member. It is that simple. Okay? And everyone that does this before 9:30 in the morning tomorrow, I will put you in the running tomorrow at noon for a chance at a free annual membership to True Trading Group. For those that are asking, how much is the membership to True Trading Group for the year without the trial? Well, it is normally $2,212, which is more than worth it. It's over $5,000 worth of tools. Okay? When you go through the trial, we offer you discounts along the way. So your first 2 days, you have the chance to sign up for, I think it's $1,420. The 2 days after that, $1,498. Then I think it goes up to all the way to $1,600 by the time that the 7 days is over. What I'm going to do tomorrow, though, because I'm not selling any annual memberships tonight, is if you're somebody that maybe would have signed up tonight for an annual membership, what I'm going to do is tomorrow, if you are not one of the people that wins the free membership, what I am going to do is I am going to make you a one-time offer that is so stupid, so discounted, that if you don't take it, you never had any intention of taking it to begin with, then I know for a fact that you signed up for the trial for the wrong reasons if you don't take that offer. Because there is not anyone in their right mind that would not take the offer I would give tomorrow at noon if you don't win the free membership. Go to ttgthree.com, ttg3.com. You enter your name, your email, and your phone number. You fill out the application. Most of you are going to get it. It's not that hard. If you don't get it, think about your answers, go back, do it again. You get to the checkout page. It is a one-time payment of $3. A one-time payment of $3. You will never be charged again, ever. And then immediately after you sign up, you need to follow the welcome tour inside of your member dashboard. You need to download our mobile app. Our mobile app will allow you to stay connected during the day when your schedule is busy, when you can't be in front of the computer. You'll receive all the real-time trade alerts, all the entries, all the exits, everything. This is very important. All right, we got to welcome Alex to the trial membership. Alex, welcome. All right, we got to welcome Alex to the trial membership. We got a lot of people that are filling out the trial membership application right now. I hope to see all of you follow through. Okay. We got Thabang, Sero, Ferdinand, and I'm going to butcher this one, Alubenga. All right. Excellent. So all you got to do is sign up for the trial membership at ttgthree.com. As long as you're in chat tomorrow at noon, I will give you a free membership. You'll be in the running for a free membership. And if not, I will give you a discount that will be very, very good. All right. Take advantage of this, please. You won't regret it. Give it a shot. It's $3. I hope you enjoyed the information you got here tonight. We go live tomorrow at 4 p.m. Eastern. Get your butts in chat tomorrow. It's going to be a crazy week. And for those that are coming to Miami for the meetup, I honestly cannot wait to meet you all. I am super excited. If there's someone that already has a subscription here, if so, tell us if it's worth it. Guys, just sound off in chat if it's worth it. Alex Lopez says worth it. David Egan says yes. 100%. Yes. So worth it. Absolutely worth every penny. 110%. Totally worth it. Honestly, brother, pay the $3 and find out. You'll judge it for yourself. You're seeing what they say, but pay the $3 and find out. It's $3. Ferdinand. Welcome, Ferdinand. I love this. J.E. Blanco says, "Are you kidding? It changed my family's financial future." The trial is literally less than a cup of coffee. Yeah. So again, go to ttgthree.com. TGTHREE.com. That's TTG3.com. Sign up, get your butts in chat tomorrow morning, and at noon, we're going over. We're going to go ahead and give somebody a chance to win a free membership. And then for those that don't win, you're going to get a hell of a discount to be a part of the group. All right. So that's it. That's our Sunday stream. I appreciate all of you. I hope you guys got a lot out of this tonight. A little bit different than what we normally do. And that's it. All right. So have a good night. Take care. And we will see you bright and early tomorrow morning. The chat room opens at 8:20. All right. Take care.